Okay, so today's topic will be about VWAP in extension to the previous session, that is 20 and 200 EMA. So the VWAP is another set of moving average. Okay, but while EMAs only calculate the price action, VWAP calculates both price and volume data at average. Okay, at given moment. So it's a trading benchmark that represents the average price the security has traded at throughout the day. Okay, based on both volume and price. Meaning, if you see the current market price trading at some XYZ level, that means, and if the VWAP at current level, it's somewhere around ABC. Okay, so meaning that particular point of the VWAP is average traded price according to the price and volume throughout the day. Okay, strictly it is an intraday indicator. You cannot use it on the bigger time frame. There are certain improvised or updated versions of VWAP where you can use it on the bigger time frame, but the typical version of the VWAP, the basic version, is itself built for the intraday version. Okay, because it's intraday trading, and I don't consider it as an intraday indicator. Okay, sorry, I don't consider it as an indicator. I consider it as a data point because it's a live data presented for you on the screen of your chart. Okay, for institution, it's often used as the benchmark price value to identify where the majority participants willing to execute their positions. Okay, to give you in a simple words, meaning institutions try to use the VWAP to find out the best entry points in the particular instrument. Getting my point? So meaning institutions will not enter when the price is away from VWAP. They will always try to execute their bigger positions around the VWAP only, because the volatility will be very less around the VWAP. When the price is away from the VWAP, do not initiate fresh position because the institutions are not willing to enter there. And as a trader, our only job is to follow smart money. And what is the smart money? The institutions, the big money. In short, the smart money is nothing but the big money. It can be a group of, it can be bunch of people, it can be just one particular entity. Okay, so never initiate any position when the price is away from the VWAP. That is the first rule. Okay, and this is the reason VWAP is widely followed as a data point, which makes it one of a kind indicator. Okay, again, I'm just saying it as an indicator because it's an indicator, but I don't consider it an indicator. Right? So the characteristics of VWAP are somewhat close to the EMAs. Slope to VWAP indicates there is strong momentum. Once again, as same as EMA, if there is a slope in direction of the market to the VWAP, then that momentum will be considered as one of the better momentums in the market. Okay, but keep in mind VWAP will not be moving as same as EMA. Okay, it takes a lot of effort to move the VWAP. To give even a slightest of a bend to the VWAP, there are a lot of efforts put in the market by big money. Okay, so VWAP, most of the times you will identify flat if there is a momentum in the market, but that momentum lacks the strength. Okay, if there is a strong momentum, VWAP will keep on inclining in that direction, meaning average price for the day is continuously getting higher and higher, meaning buyers are willing to pay a good price for this momentum. So you can find a better opportunities at the VWAP when the price is coming close to that, because the bulls will not let it go easily. Okay, as I mentioned earlier, when price is away from VWAP, then you should not be looking for fresh entries, however much lucrative the opportunity is. Simply stay away. Okay, be disciplined. Either initiate your positions early before that momentum start by using the data points that we have learned, or we will be learning in the coming sessions, or just simply wait for the price to come close towards the VWAP for your next leg. Okay, price action around VWAP should be observed carefully. Okay, because that's where players will be entering in the market. The big players will be entering in the market, which is the most justified value at given moment according to the smart money. Okay, sometimes if there is a momentum earlier happened, just like EMA, the VWAP will act as a good support or the resistance for the ongoing trend, where you will find one of the best opportunities you can find. the risk reward ratio in options can be as big as 1:10, 1:20 if you capture at right moment. Okay, I will tell one of the setups to find those opportunities. Those opportunities are very rare, but extremely rewarding. Okay, those opportunities at the VWAP are extremely rare. If not extremely, once in a month. You may find those opportunities once or twice in a month. Okay, and that once or twice in a month can put you a lot ahead in your equity curve if you capture that carefully. Okay, I'll show that. So, in a trend, as this is the extension of the previous point, in a trend, these bounces from VWAP are one of the high probable trade setups. Okay, I'll show you on the chart. Previous day's VWAP close level is a price attractor in the next day. This is the price. This is the point you should be reading it as different. Okay, the point where the VWAP was closed previous day is is an attraction point for the next day. Okay, it's like a magnet to the price. Why? Because the market will treat that point as a reference point for the next day. Because this is the point at the end of the session. Because the market has two zones. Okay, every day is divided between two zones in terms of the volume liquidity. Okay, early morning there will be huge action, there will be huge liquidity, there will be huge number of volumes in market and traded. Okay, in the midday the volumes will dry up. At the end of the day the volumes will pick up again. Okay, so this is the reason the closing point of the VWAP will be important, because this is the point where you can see the people have traded most. Okay, because at the end of the session you all know the big number of money is already put into the market at the end of the day for the next day's position. Okay, people look forward for the gap ups and gap down as per their views. Okay, when they have that view, right? Because of the theta decay, if the tomorrow is expiry and if the price in market is going to open the flat, there is no news, there is no event and market is open flat, then you will catch that theta the next day. To capture the theta decay, to capture the gap ups and gap down, the positions will be created in huge amount, and VWAP helps us to identify the reference point. Okay, so VWAP tells us that this is the average volume and price traded at the end of the day, and you should keep this in your eyesight to find out the opportunity when the price is closed. Okay, so the previous day's VWAP close is price attractor in next day. Keep that in mind. I will explain it on the chart, but we may not use it as often as you will see. Okay, but whenever we see this is important, we will definitely mention it. Okay, so this is an example. We will also see examples on the right chart, so don't worry about it. So you can see this is a VWAP. Okay, you can see there is a slope, meaning the market has given a good momentum at the in the earlier session, and this is the point where VWAP is closed, and you can see there is a sharp jump in the VWAP. Okay, so ignore this jump, because VWAP is starting fresh for the next day here. Okay, at this first candle intraday. So this gap is this jump in the VWAP is not relevant. Okay, so what is relevant is the point here where it jumped from or where it was closed the earlier day. Okay, so it will attract the price, but based on the momentum, based on the current day, next day's setup, you have to understand whether this should be used for our reference point or not. If the market, let's say, opened here, looking at this momentum and sustained about the VWAP and then started to go up, then this point will be irrelevant. Okay, for that day. Later onwards, if the price start to come down, then we can use that point. But on this day, it's going to relevant until the price is not coming close to the vicinity of this point. Okay, so we will not be using if the price is not close to it. What happens in this day? Okay, price opened gap up due to the momentum happened on the upside earlier day by as visible by here in the price action and the VWAP was slow. Okay, so what happens here? The price tried to go up in the first 5 minutes, then failed miserably in the next 10 minutes to sustain above it. Okay, and VWAP becomes an important point because it is the volume and price, average volume and average price. Okay, so price up and down above the VWAP in high volume zone becomes a huge deal. Okay, so in the first candle there's going to be the volume. Okay, those volumes are not able to sustain about the VWAP, or the bulls are not able to sustain about the VWAP. The price immediately broke the VWAP on the downside and started trading below it. Okay, so now you know the momentum is started on the downside. Okay, momentum, you can see this is where the price again retraced here and then started to come down. Right, now you know the bears are started to push the price on the downside. They have started to book profits. They have started to observe the bulls, whatever you want to assume from here. Okay, so as this is a gap up and coming down, it can be exhaustion gap, it can be a profit booking. Okay, so the price started to come down here. Now it again retraced. Why? And from which zone? Look at this morning opening range. The previous day low will become an opening range here. Okay, this opening range here, okay, this opening range low here will act as a support for the bulls to maintain their territory for intraday. They tried to bounce here, but again rejected at the VWAP here conveniently. With conviction, now you know the VWAP acted as a resistance here after this momentum because the bulls are not able to sustain and the bears are coming in with a strength. Okay, so as you can see here, once the setup is clear as crystal, okay, the setup is crystal clear now. You have more than 1 hour here to analyze this price action. Price opened gap up, price coming down below the VWAP. The momentum is not sustained, not sustaining above the VWAP, and price is resisting at the VWAP. Now you have to be prepared for any downside triggers that you are going to get. Okay, but why will you go and take the trade here for the with the conviction for the downside? Because the market is going to be attracted towards the previous day's VWAP close. Okay, it is also called as anchored VWAP, but to be honest, anchored VWAP is a whole different concept. But I still call it as a VWAP. Okay, because my view is this is where the price was anchored, as a ship has anchored at the dock. Okay, so this is where the price was anchored or the VWAP is anchored, and the price will use this as a reference point and it will attract towards it. Okay, so now I know that there is a price which is going to be attracted towards some important area, some important money zone, and anchored VWAP or the VWAP of the previous day is lying downside. The price is initiating the bearish momentum, so I should be looking forward for this bearish trade. Okay, so what I'm getting here, a clean rejection. Okay, another price action thing that you are going to notice here is that you can see a lower high, meaning it is resisting at the VWAP, it is forming a lower high, it is forming a bearish setup, and then resisting at the VWAP, meaning the setup is going to be turned into our direction for downside. Okay, so we can confer here the setup is bearish and we can take the trade here. Why? Because candlestick is also suggesting the same. It is forming a bearish candlestick for candlestick setup, that is shooting star. Okay, this high will be your stop loss, or you can keep defensive high as this stop loss, and you can comfortably take the trade here. Okay, because you know the price is going to be attracted on the downside, so you take the trade here, or you can simply take the trade at this low as well. Depends on based on your analysis where you are comfortable as per your experience. Okay, we would be suggesting the trade to take here because stop loss will be as low as possible. Okay, and the setup is high probable, so you will be taking a trade here and then you will wait for your ultimate target. This will be the target. Okay, so if you guys have attended the previous session, we were telling you constantly that keep on booking your profits, but now our approach is completely changed. We don't book our profits. Okay, we wait for the target because making big in your winning trade puts you well ahead in your equity curve. Okay, so if you, so let's say you entered here, you see the support, you're in the exit here, there is no point. Okay, because if you're missing out on this big move later onwards, right? What happens if the next 2 days you hit on stop losses? You will be losing entire profits. But if you capture this all move, you know where is the target. If you sit tightly and you capture this entire move, then you don't have to worry about your stop losses for the next 10 days. Right? And it's not like that we are going to get the stop loss for the next 10 days consecutively. Right? So always be patient for your winning trades and capture as much points as you can until the target. And by far, if you have witnessed our views, our analysis, we are hitting our targets consecutively. Okay, on an average. There are some losing days in between. Absolutely, yes. We are not God. Okay, but we are a trader and we respect our views now. So, more than ever, due to the volatility, due to the dynamic change, dynamic shift that happened in the market. Okay, so we have to respect it. So, the price came down all the way until the target. And you can see what happens here. Exactly from that point onwards, price took the support and look at the bounce. Okay, now there is a one change. If you miss this move, it's okay. You can catch this up move. Why? Because price is now far away from the VWAP. So if it's far away from the VWAP, you don't initiate the trade in that direction. You trade in, if there is any setup forming in the opposite direction where the price can travel towards the VWAP, then you can look forward to it. Okay, but not against it. So price is away from the VWAP, so you can use this data that the price is taking support here. Okay, you can see how it is taking support. There is a lower time frame divergence happened, a bullish candle is appeared, price is taking support here. You can take a calculated bet here and then capture this move until the VWAP, because price will attract the VWAP for the intraday. Okay, not much longer time price can keep it hands away from the VWAP in intraday. Okay, except rare days where the momentum is very stronger, there is a linear trend day. Price is going trending continuously for the day. Okay, but many times if the momentum is moderate, then price will keep on attracting towards here. You can catch this move. It's okay if you did not catch this move. Once again, there is another third opportunity here. A beautiful shooting star at the VWAP. Slope to the VWAP indicating downside. Shooting star to the VWAP. You capture this another move. Okay, so there are three opportunities presented here based on the learning we have just by the VWAP. That one, this move, second this move, and third this move. All you have to capture is just one trade. Or if you capture this one move, you can still capture this third move using only 10 or 20% of your profit as a stop loss. That's all. And you compound your profits. Okay, but I would recommend to sit tight once you get a one good trade. Okay, but I'm showing you how you can utilize the data. Okay, there will be days like you say, some people will make money from the call side, some people will make money from the put side, just like yesterday. Okay, as you can see, there is a as you can see this day. Okay, some people captured this down move, some people captured this up move based on their views. You don't have to trade everywhere the market is going. Once your view of the morning session is completed, then sit tight. If you get a second view, then trade. If you didn't trade in the morning session and your analysis worked in the second half of the day, then go for it. But once you made money in the market, that day your job is completely done. Okay. And being a full-time trader doesn't mean you have to trade throughout the day. Trust me, it's one of the biggest misconception many new traders have. I want to be a full-time trader. I have to sit from 9:15 to 3:30. Okay, but what if your target is achieved in within just half an hour of the morning? Until 10:30, until 10 a.m. itself, if you have done your day, why would you want to waste your next 5 hours? Just enjoy the profits, withdraw your profits, enjoy the day. That's the beauty of being a trader. You get a day for yourself, and it's not like you're wasting the day. You're already completed your task. Later onwards, keep on learning, keep on reading, do whatever you want, make your day productive. Or you just want to do an enjoyment, do that, whatever your choice is. Okay, so this is the learning of the VWAP, and this is the another learning, how to use mean reversion for the VWAP. Okay, so you can see this is the trending day on the downside. Okay, these big candles were happening. Okay, later onwards the price started to inch towards the 20 MA. But what is happening, observe here how we are using VWAP for the mean reversion here instead 20 MA. This mean reversion completed towards the 20 MA. Okay, but more than 20 MA, VWAP is powerful if you compare the strength. Okay, but at certain points 20 MA will act better than VWAP. Okay, but that doesn't mean it is nullifying the other indicator strength. No, it doesn't work like that. Okay, so if you notice there is a strong momentum happened here from the on the downside, then price started to mean reverse. This is where it took this resistance at the 20 MA exactly and started to come down, but it is not gaining the strength as it is at it should be from the 20 MA even after there is a slope. Okay, it is failing here. Why? Because as we all know, whenever we get an opportunity, technically as per the price action, we have to keep the target of recent swing low or high. Okay, so what is the target here? If the price is taking resistance here, then this should be the first target followed by this one. Okay, this is not happening here. Instead, what happened? It broke the 20 MA. Okay, now if it has to move down, it should not repeat, I repeat, it should not break the 20 MA. Okay, don't consider this as a shakeout, because when the momentum is stronger and you're looking for the mean reversion trade and the kiss and bounce trade, then price does not break the 20 MA at any cost. Bulls and bears with respect to their trend will not let it happen. This is the truth. Okay, so don't take these breakouts above the 20 MA lightly. Exit your short trades immediately. So you're exiting your trades even before the stop loss at somewhere close cost to cost and minor losses. Instead of ignoring this trade or ignoring this stop loss, instead of just moving away, there is another opportunity waiting for you, because this big bullish candle broken about 20 MA, meaning the price is going to be retraced towards the VWAP. Go back and check any time frame. Go back and check at any day whenever there is an opportunity like this happened. Okay, for your study purpose. Price broken the 20 MA. You just have to find out the days where the good momentum happened in the morning session. Strong one side direction move. Okay, and then see if the price is retracing towards the VWAP. How it is retracing. Okay, this candle broke the 20 MA. Next candle also took the support at 20 MA and started to bounce. Okay, this is where you get an opportunity with this stop loss, or this candle low itself can be act as a stop loss. Okay, and you keep the target of 20 VWAP. And I'll tell you, when the price retraces towards the VWAP, the momentum is sharper than ever. Okay, so instead you can see this retracement towards 20 MA compared to this one. Whenever the price is retracing towards 20 MA, it will retrace very slowly sometimes, most of the times. Okay, but whenever price want to retrace towards VWAP, it will retrace very fast, more often than not. Okay, so even the price may seem like the momentum is not happening yet. There is not much of distance. This momentum will give you 20-30% ROI in the options. These are the spikes. Look at this candle. This spike will give you your targets. All you have to do is exit whenever the price is coming close to the VWAP. You will not wait for the more. You will not become greedy here, because this is the down momentum. You are going to take a mean reversion trade. And mean reversion trade means exit at the average price that you are looking at. That's all. No matter at any cost. Okay, so this is another way to trade mean reversion. All right, so that's how you use the VWAP whenever such opportunities are presented. But once again, if you have captured this down move, why would you waste your money? Why would you waste your efforts? At this point, if you see the target is met or anywhere you would have hit your targets, what your job is to close your terminal, be done with your day. If you can't keep on your hands, if you can't sit on your hands, simply deactivate the segments. Okay, if you don't want to trade, be disciplined. Discipline is more important than any other thing in the trade. Okay. Okay, let's see some questions. We have to take mean reversion trade towards EMA 20 or VWAP, both. This is the example I showed you. This mean reversion, you can also trade provided there is a big gap happened between 20 mm price. But if you ask me, there is no good setup for the 20 mm mean reversion. Okay, but this is a good setup for the VWAP mean reversion. It can happen at anywhere. 20 mm mean reversion is already completed, so you don't be looking for the 20 mm anymore. If you take short position here, your target is not achieving, price is going against you. You exit your short position immediately, you go long here for the VWAP mean reversion now. That's the bottom line. Okay, I'll show you one of the examples for the mean reversion in the recent time happened. Let me see first if I can find it. Okay. Okay. On this chart, it may not be possible. It can be a continuous chart. See here. Okay. So see, this is the steep momentum happened here, and on I think which was the month, it is April. On April future, there was some kind of a resistance here. Okay, I don't know what resistance was there. It can be POC, it can be value area, it can be anything. Okay, so if you see here, the price was after this move was not gaining the strength. Instead, what happened is started to reverse until the 20 VWAP. Okay, see the strength, the price started to reverse towards the VWAP. Okay, so that's all. Okay, so let's see for the current day. There was another instance, I'll tell you. This one, similar structure, right? See, getting not able to sustain around this after this up move, immediately retraced towards the VWAP. Okay, this failed, again came down, again up, went up, again came down. So it was a fluctuating day. Okay, but I think on this day we also caught this up move somewhere around, right? We have to start our mean reversion trade at any level or just reversal candle. There should be some support, there should be some resistance. Okay, so if you want to trade this mean reversion, there should be some kind of a resistance here. Blindly, you will not go for it. Okay, just because the price is away, just because then you will go for the mean reversion. Don't do that. It will not happen. There should be some strong resistance there.